Shiraz Jiwa, you are founder and CEO of the Valesco Group. Thank you for joining us on BiTV.
Luc Etienne, it's my absolute pleasure. Thank you for having me and looking forward to this chat with you and your audience.
The pleasure is all ours. Valesco recently completed the 460 million acquisition of the Sequana Tower, which is Accor's headquarters in Issy-les-Moulineaux. What attracted you to this 26-story and 43,000 square meter asset to start the conversation?
Yeah, sure, no, absolutely. I think one of the things that we've been doing since our inception is seeking to disrupt the commercial real estate market and looking at commercial real estate through a very forensic lens, looking at assets that are underpinned by strong real estate fundamentals, are of a mission-critical nature, and serve as tomorrow's offices today. And then wrapped within a form of pricing dislocation that then allows us to be able to deliver a risk-adjusted return to our investors that is higher than typically is possible. And clearly the macroeconomic environment right now has presented opportunities and pricing dislocations primarily because in downturns, as we saw post-2008, the good assets and the bad assets are almost treated similarly. There's a sort of a lack of real appreciation by the market of what distinction should actually take place. It's something that I refer to as throwing the baby out with the bathwater. So we're here to find those babies, needles in haystacks, and Sequana Tower certainly serves as one of them. An exceptional quality asset in a very, very strong micro location, underpinned by strengthening real estate fundamentals, an asset that already has strong ESG credentials, and we have a pathway to strengthening them further. And then you have a tenant of the quality of Accor, exceptionally well led, navigated the pandemic with aplomb, has a market cap of 9 billion euros. Will certainly be seeing credit rating upgrades in the foreseeable future, we believe. And really, when you're looking at a hospitality giant that is the largest in Europe, the sixth largest on the planet, and quite frankly, whose revenues now are back to pre-pandemic times, and I think its year-on-year EBITDA was 3,000%. So you've got the tenant, you've got the mission-critical asset, you've got the strong location. You've got the strong real estate fundamentals, you've got the ESG credentials that can continue to enhance, you've got strong occupancy, and then I think what really adds the additional enticement for us is being able to acquire at a level which is more than 100 basis points wider than that recorded in the micro location. As you know, in this micro location, you've got headquarter buildings, you've got Microsoft, Cisco, Johnson & Johnson, Capgemini, Nestle. Nestle and Capgemini buildings were traded in 2020, 2021 at more than 100 basis points tighter, materially more than 100 basis points tighter than where we acquired. So we feel really good about that as well. And I think it's important that when we talk about this pricing dislocation, we absolutely don't believe that Sequana Tower should be trading more than 100 basis points wider than the last recorded yields in that micro location. But it's because of that concept of this non-discriminate reduction in pricing across the sphere that we're able to unearth gems like Sequana at quite frankly favorable returns profiles. So hopefully that gives you a few more elements as to why this was such a compelling transaction. Of course, it's a 12-year lease without breaks, with a full inflation hedge. And that, of course, is particularly important during this climate.
Yeah, because you mentioned this climate, and you noted in the press release announcing the transaction that it is one of the largest office deal of the year in continental Europe. And it was executed in spite of a highly volatile macroeconomic backdrop, your words in the press release. And you mentioned it a little bit earlier, but I want to ask you and make sure I understand, how were you able to navigate the current tumultuous market environment and carry out such a significant significant acquisition in a market, the French office market, which at the moment a lot of people are saying is kind of frozen in terms of transactions.
Yeah, look, I think for us again, we thrive during times of complexity. We acquire assets through special situations, complex restructurings. There was a restructuring element to this as well when it came to the financing package that was accretive to the output and the returns profile. But ultimately, given where we see the appetite of occupiers for mission critical assets that are sufficient for talent and occupiers' demands tomorrow to today, and also are appreciative of the sustainability credentials, those assets are few and far between. And we see this really as an incredible buying opportunity where we've had a reduction in pricing that, quite frankly, across the board for the high quality assets is undeserved. It is deserved for the B class stock, but the B class stock has therefore brought this indiscriminate reduction for the A or the A plus stock. It presents a tremendous buying opportunity. There's less competition out there, and we feel that quite frankly, we want to capitalize on these pricing dislocations, and the Parisian real estate fundamentals, the macro micro picture, remains something that we absolutely buy into. The liquidity within the real estate space, the depth within the real estate space, the reoccupation of best-in-class offices, the lack of high-quality space. These are all significant proponents within the Parisian real estate space, and we again feel very strongly about building on our investments within Paris. Within the commercial real estate space, Sequana being, our first of hopefully several as we seek to expand our footprint across Paris.
Speaking of which, Businessimo is a Paris-based media group. So obviously, I have to ask, as you continue to grow your pan-European platform, how do you see France figuring in Valesco's investment strategy going forward? Maybe in terms of sectors, of geographies, of well, I don't want to put words in your mouth, but what do you see? How do you see yourself being active in France going forward?
Yeah, no, absolutely. And genuinely don't need to put words in our mouth. I've explained why we feel, very strongly about the Parisian real estate space. I think Paris and London are for us the two most resilient gateway cities within the wider European space. And the reason for this is fundamentally, these are real estate markets of depth, of liquidity, of establishment, and more so, headquarters, flock to these locations. These are European financial centers. But if you look at the previous market cycle, if you look at pre-2008, we were experiencing prime yields in London and Paris, not that far off the types of record yields that we saw in recent years. So we didn't move in these locations to yield environments that were necessarily unprecedented. We saw bank base rates, similar to today, pre-2008, but prime yields still, at tighter levels than even bank base rates. So London and Paris for us are two areas of strong focus. With that said, we actually see that there's probably going to be a number of presentable stressed and distressed opportunities in Germany. We're a strong believer in a number of locations, again, strong real estate fundamentals in a number of locations in Germany, top 5 cities, say, for example. However, if you look historically at real estate yields in Germany, they've typically operated 5 to 6%, plus minus, and never really saw the types of yields that we saw in recent years, down to twos. And every time I went to Expo Real over the last few years, I first heard 5% is the new 6, then 4 is the new 5, 3 is the new 4. It got to a point where it was really just not in accordance with things were operating not in accordance with both the theory and practice of economic reality, of real estate fundamentals in particular. those are the locations now and those assets, unfortunately, that in our opinion are going to see significant yield widening and will present opportunities given the refinancing challenges that may be at bay. So Germany could become more of a focus for us. We do like the Benelux region. Again, if we feel that's a little bit more similar to Paris and London, a lot of resilience, tighter market in that sense. But certainly, I think you think of us as a Western European player, but we're not averse to looking at special situations in Northern and Southern Europe.
Okay, thank you very much, Shiraz Jiwa, for this valuable insight. And thank you all also for being with us. And we'll see you soon on BiTV.
It's my absolute pleasure. Thank you very much, Luc Etienne.